Thank you very much, and thank you for all of you who are patient and with us here in the room and trying to learn something instead of networking there. We will try to make this session interesting. The idea would be really to inspire your thinking to look a little bit into the future. So maybe it will not be directly applicable to your daily work, what you hear from us today, but hopefully it will be inspiring because we have excellent speakers with us. We would also like to hear from you. So you can use throughout the session your phones to ask the questions, and I will get them here on this screen. And also feel free to raise your hand and participate in this discussion. Before we announce, and you see it on the screen, the topic is really to look into the future of inclusive finance. I think we will hear a lot about technology, but not only, because this is something which is shaping the world, everyday world for all of us, but especially in inclusive finance. With no further ado, I will just make a very short introduction in order to make this session more dynamic. Sorry, I will not read all your biography, but it's available on the website for those who want to know more. Sébastien Duquet is Director and Head of Development Finance Institutions and Sovereign Business in Mirova, France. And Sébastien is basically in charge of promoting investments in emerging markets in a fund which manages around 30 billion euros in assets. Some of you know Sébastien because he has been working in Symbiotics and before that in Planis and Responsibility. Next to Sébastien, we had Mr. Surjit Chana, who is coming from the other part of the Atlantic to share with us how they see the trends today in inclusive finance. His biography is very rich, but I will just mention that Mr. Chana is the Harvard Fellow. He is a technology and digital transformation executive, and he's also has very relevant experience in the beneficial state bank in the United States. Don Ginsel is the CEO and board member of fintech Holland. And Don is also the president of Digital Finance Association. Don will provide very useful insights on how digital becomes very relevant for all of us today, including microfinance. On the screen, we may have, I'm not still sure how this will work, but we expect to have a brief intervention from Mr. Stefano Quintarelli, who is unfortunately sick, but he'll still has a lot of enthusiasm, and he will try to speak to you today and share about his experience about social entrepreneurship, but with a focus on digital transformation, innovation strategies in the private sector. He was, I would just pick one point, he was a member of the Italian parliament, so he knows the political context very well. He may add to that today. I will start, I think, with you, Surjit, if you don't mind. Coming from the world of technology, please share with us what do you see are the main global trends that will impact inclusive finance and some specific emerging technologies that you find relevant. And since we have many MFI colleagues here in the room, we would like to hear from you how MFIs can leverage such technologies to improve their operations and what are potentially some risks and challenges. Please.
Jasmina, a small question to start with. First of all, it's my first trip to Poland, so very excited to be here, and I appreciate the MFSC inviting me to join today and the AI panel tomorrow, and then with the CEO forum on Thursday. So I'm very excited by the whole gathering. The soundbite would be, I'm very optimistic on the future of inclusive finance. If you think about the history of microfinance from the very humble beginnings, we're already a $250 billion sector globally. That's truly amazing from where we've come from. The anticipation is that the sector will be $550 billion in the next decade. Which is really very powerful statement, but nothing's guaranteed in life. So we have to do activity to get to 550 billion. And the stuff I'm going to talk about is very much focused on how is it we're going to get there? What are the trends that's going to enable us to do that? I think in threes, to keep things simple. There's a set of environmental trends, there's a set of product and service enhancements that we need to do, and a set of technological trends. In terms of the environmental stuff, the great news is countries around the world are building financial inclusion strategies. Some are revising them, some are updating them. There's a recognition that this sector is significant. With that comes the counter, which is they also need to provide regulation and oversight for us. So that may be a little bit of a headwind, but it's important to make sure that our clients are treated well. The second item I mentioned on the environment in this section is the fact that the planet needs our help from a climate point of view. We're at risk. So I really think that sector needs to step up to provide sustainable solutions and worry about the climate. Green finance here is the critical play, I believe. The other thing that comes with being a bigger sector is we have increased focus on are we having a social impact. So you'll see a lot more activity about prove to me that you're having the social impact. It's a given in the world that there will be political dynamics, economic dynamics, high inflation environment. We had the COVID pandemic. But underneath that, there's also demographic changes going on. The urbanization is continuing, which has an impact on the sector. By the way, the birth rate means that, from the past, means there's a big youth population. But if you look at the latest data from the United Nations, the birth rate has been dropping around the world, even in countries like India. I know Hungary experiences it significantly, and that will have a dynamic on our sector that we need to think through. And the last one under this environmental stuff is impact investing and blended finance. I think that's going to be an important play, and I think we're going to talk a little bit about that. So that's on the environment. Then on the product stuff, I see the continued diversification of MFIs. In addition to microloans, it's savings, it's insurance, it's remittances, and digital transfers. So I see that continue. And that's part of how we grow from 250 billion to 500 billion. That's a key dynamic. The other thing that maybe doesn't get talked about is human-centered design. It is very important that to serve these communities better, we have a very clear view of what their needs and wants are at a deeper level. So human-centered design is another key trend. As you dig through the human-centered design, you realize financial literacy and enabling our clients to better use our financial products becomes super critical. It's not just about the breadth of people, but it's also the depth of people. And you get to the depth by providing financial literacy and education. The rural expansion, I think, is real, particularly from an agriculture point of view, but from lots of different perspectives. So I see that's part of how do we double our size. One thing I would mention is there's increased competition. Fintechs, commercial banks, technology companies, and we'll talk about partnerships here, but we've really got to make sure that we partner with fintechs, we partner with these other entities, and I know we're going to talk a little bit about that. And then the last trend is where I think a lot of the conversation is going to be is around technology. I really do believe technologies, which I'm going to describe in a minute, are fundamentally changing how we live, work, and play. And the digitization of the planet is well underway. The digitization within financial services is well underway here, and then within our sector. Let me wrap up on what are the technologies, because Jasmine asked me to talk about those. Again, I think of threes. There's three types of technologies based upon what value do they give us MFIs. There's a set of technologies that improve service delivery. And in there, I'm talking about peer-to-peer lending platforms. I'm talking about RegTech for financial inclusion. How can you use regulatory technology to support your business, and blockchain and cryptocurrencies? And I know I'm going to talk about that. So those are under the improving service delivery and efficiency. There's a set of technologies under enhancing access and reach. How do you enhance access and reach? Those are technologies like mobile money and digital payments. Technology like biometric identification. So to get to the rural areas, you need to have biometrics. And although it doesn't talk too much, Internet of Things. So in these agricultural environments, sensors can be connected to the internet to see how your assets that you're financing are doing, help with from an agriculture point of view. So that's under enhancing access and reach. And then the final one, which I've saved for the end here, is around product customization, risk management, and driving further efficiencies. Based upon big data and analytics here, which I think some people are using, we need to do more of, is AI. AI is probably the biggest technological trend that we're going to experience here that's well underway here. AI is, to me, is essentially systems that mimic human intelligence. And the sophistication is getting better and better, so they allow us to make decisions. I really believe this is going to have a fundamental impact. The latest version of AI is called generative AI. So not only can you help make decisions, you can generate text, you can generate video, you can generate images, you can generate audio. It's a game changer. And it was only invented essentially, although AI goes back to the 1940s and even 1950s here, generative AI was just invented and popularized by ChatGPT. And there are very many large language models that open source that are being developed that's going to have a profound impact. Let me wrap up, because it's not just about technology for technology's sake. Yes, I'm a technologist, so I am going to say good things about technology, but it is about what can the technology do for MFIs. And there's really three things that technology will allow us to do. One is drive operational efficiency and cost reduction. This comes down to automating and optimizing internal processes. This comes down to reducing human error. This comes down to lowering operational costs, and this will allow us to scale without increasing our costs so that we can be competitive. The second area that the technology provides us is to improve the client experience, to deliver an experience that's superior, that understands the client in a deeper way. This is where human-centered design, to me, is very important, because you can't deliver that without understanding what their needs. This allows us to tailor the products to what the customer needs. This allows us to boost loyalty. This allows us to deliver an experience that's in today's world. And then the last one is risk management. We manage risk every day. These tools will allow us to do that better. So how is it we're going to grow from 250 billion to 550 billion? It's these trends and leveraging technology. Sorry for the very long answer, Jasmina, but that gives you an overview.
No, that was really perfect. Thank you so much, Surjit. Please, if you have any questions for Surjit, feel free to put them on the chat. Sebastian, I would turn to you. You're looking at the sector from the investor's perspective. You have a long-term experience on, well, I'm not exaggerating, you're not that old. You have significant experience from microfinance, but nowadays even broader than microfinance. What are maybe some trends that you can see in the world of impact investing, ESG, which are relevant for our sector here? And what do you think the MFIs should pay attention to be relevant and to continue to obtain financing from international investors, but also from new, possibly innovative solutions or funds?
Thank you, Yasmina, for kind word and for the invitation. A bit funny for me to speaking at the opening session at MFC after 15 years attending MFC. It's when I'm not in microfinance that I'm speaking at the opening session. But so as a disclaimer, I will give what I see as a trend as a fundraiser for emerging market globally, but not necessarily for microfinance. At Mirova, we manage 30 billion of assets, but that's predominantly in renewable energy, in natural capital, ocean, a bit in microfinance, but mostly for Western Europe. The trends are contradicting themselves. On one angle, we have globalization worldwide. A lot of things are much more easier than they were in the past. On the other angle, my father was able to do a trip from Paris to Tehran by car in the 60s. It's not anymore possible. My kids could not do it. Klaus Tischhauser, when he created Responsibility, was coming back from a bike tour in Africa during a year. It's not possible anymore. And if you could imagine that 10 years ago, there was a European football club league in Kharkov, and where Kharkiv is today, you could feel the difference. So in such a very unstable world, basically institutional investors are looking for stability. This is a bit a contradiction, because if everything is unstable, then maybe you could say, okay, let's invest also on new market, new things, because anyway, everything is unstable, we don't take additional risk. They do exactly the opposite. And that's why we were expecting 20 years ago, when we started fundraising at Responsibility and then at Symbiotics, that there will be more and more demand for emerging market. And if you look at the statistic, it's not growing, it's even declining in percentage of assets. It's true that the assets have grown. When I started fundraising 20 years ago for Microfinance, the total asset management side of France, if I take France, for instance, it was 2,000 billion. Today it's 5,000 billion, so it's 2 times more. But the percentage of assets in really frontier and emerging market has declined. And this is partly linked, related to this search for stability. The second aspect is regulation. There's more and more regulation, and now we'll have a second wave of regulation. The first wave we experienced was in 2008 and 9, post the Madoff and Lehman Brothers crisis, and there was all those regulations that put in place and influence a lot the asset management company in Europe with IFM regulation, QYC, compliance, etc. Now a new set of regulation is coming in environment, climate, biodiversity, particularly in Europe, in the UK, but also to some extent in the US. And basically it reflects the fact that during years, decades even, there was an hope that the market will regulate by itself and will increase the financing of green technology and green assets. It did not happen. And secondly, there's a risk of greenwashing. And last year, Dutch bank green bond issue and the like make it even accurate the fact that for institutional investors, they are facing different and contradicting trends. On one angle, they are asked to invest more in green. On the other angle, they are really afraid of reputation risk. They could be accused of greenwashing and the like. So investors use a lot those regulations to protect themselves. And now there's a full wave of new regulation coming in the EU with the EU taxonomy, SFDR, CSRD, all those words that maybe for you are not so familiar, but they will influence a lot what you are doing. CSRD itself means that all investing companies in Europe, 50,000 companies in Europe, will next year have to report around a full set of indicators about how they comply with the EU taxonomy in terms of green financing, natural capital preservation, biodiversity, and the like. And for us, asset manager, it means that all the funds we manage, we have to report how much of them are aligned to EU taxonomy. And Mirova is both involved in developed and developing countries. And if you look at our fund in developed countries, they are 100% aligned. So if I do renewable energy project here in Poland, they are fully aligned with the EU taxonomy. We do also renewable energy project in Africa. Only small portion of them are aligned with the EU taxonomy. Why? Because it's small SMEs are not able to report exactly according to the EU taxonomy. And that's why if you are an Armenian MFI or a Tajik one, you may be asked by the fund to report with those EU taxonomy reporting, and you are not equipped. And then you are not aligned with the EU taxonomy. And as a fund, then the investor looking at the fund brochure, they say, but only 20% of the fund is aligned with the EU regulation. So those regulations, whether you like them or not, they will indirectly impose to you, because most of the investors are still European. And that's a third trend we could see. 20 years ago, we always had hope that the US will one day or the other, or the Asian will replace the Nordics, basically, that are the main investor in microfinance. I refer to Switzerland, Netherlands, Germany, Scandinavia. And it has not happened, almost not happened. Asia is still a market where the money is there, but they are still looking for high returns. They are not so much interested about impact. In the US, it's a very contradicting. There's a huge new generation demand for impact, but at the same time, as you may have heard, there's several discussion about whether the fiduciary duty of the fund in the US could be aligned if they take care more of ESGs and of the financial return. So there's a pushback on the ESG statistic for the first time ever is declining for the last 2 years. There have been less fund doing ESG investments the last 2 years than there was 2 years ago. SFDR 9 also was of help for designing impact, but because of the risk of being accused of claiming impact under SFDR 9 regulation in Europe and not doing it, a lot of funds decided to move back onto SFDR 8 or 6, not to claim to do impact and to reduce the impact expectation. So regulation is really a driver of how you structure a fund and what you do and what you want to do. Third thing is Europe, US, Japan need a lot of investment. So 20 years ago, 10 years ago, there wasn't so many opportunity to invest in Europe. So you were able to tell a European investor, please invest in Georgia, you have more opportunities than in France and Germany. This is not anymore the case. We have to invest massively for the transition to the green economy. We have invest massively for taking care of our elderly, etc. It means that for European, US, Japanese investors, they could invest at home with good return. All the funds we manage in Europe, for Mirova, they provide us 6, 7, 9% in euro return to investor. In emerging market, we are at 4, 5% in dollars, so 3, 4% in euro. So you come to an investor and you explain to him that you invest in a country very far that seems unstable for a return that will be lower than what they could get to invest in renewable energy in Poland or in Germany. So that's why also it's so difficult to fundraise. And this trend will accelerate. If you look at the demand for investment in Europe, it's only growing and growing and growing in the coming years. So those trends infect a lot the investment we have. On the last
Sebastian, on that one, is this must be related to the high interest rates environment, surely, because there was no appetite also to investment in Europe, and interest rates were, or returns.
Yeah.
Returns were like
the two are related. If the high interest rate, it's also because there's opportunity to invest. And it's true that if interest rates go down, maybe emerging market could take away part of the expectation. But with the currency hedging on the like, we have to see where it could land. It's part of the explanation, but one is really the demand for investment, and that's also trigger much more that. On the government side, on DFI side, on one angle, developed government budget are really on restriction, but DFI are more and more active. And if we look at the DFI share of the financing of impact investing in emerging market, it keeps growing and growing and growing. DFI are more and more active, where we were expecting them to just crowd in and out, the crowd out of the private sector, crowd in the private sector, but actually they crowd out the private sector mostly. And the trend is there. If you look at the discussion at MFC 10 years ago, it was about that. You know, DFI are there, they are crowding us out, etc. Not anyone care about it. No, everyone is used and happy to have EBRD, Banque du Conseil de l'Europe, IFC, European Investment Fund as the main investor. And the debate is closed. That is to say, no, we are used to have the DFI as the main sponsor of emerging market impact investing. And the trend accelerates as well. If you look at the statistic, it's more and more. And they talk about blended finance, but actually blended finance has reached a cap. Convergence issued their latest report last week, and you could see that for 4 or 5 years, blended finance has barely grown. A lot of people talk about it, but very few are doing it because it's required DFI to take more risk, and very few are eager to take more risk than they do. And that's why there's a lot of talk, there's very, very few blended finance funds that are created. And if they are created, it's usually either for very country risk specificity, if you want to do something in a very risky country, or something easy that could be done anyway without blended finance some way. So that's a bit the trend. Having said that, again, this world is characterized by huge inequality, and one of them is that there's more and more money. If you look at the sum of money available in the US, it's amazing. And that could change completely the landscape. We see for the first time some of the family office from the Bay, from the rich tech guy, starting to be interested by what we do. And if they come, they could come at scale, as Omidyar Trust and the other came 10 years or 20 years ago, but with a new wave. So that's why with such a money capacity in the US particularly, it could change the spectrum. But overall, the impression is that the world is reducing its view. Everyone is focusing on its region, is scared of investing in things they don't know, using regulation to protect them, being very scared of reputation risk, and trying to focus only on things they know well. And somehow in 20 years, this trend is accelerating. Last word, maybe Yasmina. Blockchain on peer-to-peer platform. We had also some hope that they could scale and help MFI and others to get financing. 20 years after, we have to acknowledge that peer-to-peer platform, even if some of them, like Lend a Hand, are doing well, they have caps, they growth. On blockchain, I've not seen any blockchain fund at scale, etc. So our asset management industry in impact investing remain predominantly something very simple. We promote to high net worth or medium net worth individual in Switzerland, Germany, France, and the Netherlands our product, and they invest through the banking network in mainstream funds, as we were doing it 20, 30 years ago. And all technology are just used to approach them so that they could invest online. But at the end of the day, it's exactly the same thing.
Thank you, Sebastian. Just a comment from our side, it resonates fully what you said on the role of the international finance organizations or development finance organizations, because we at the CEB have actually stepped up our efforts in inclusive finance. Our mandate is social infrastructure and social inclusion, and until 15 years ago, we were not financing microfinance, and then little by little, we recognized that basically there is a need for DFIs to be back, as you say, for us to come in, not to be back because we were starting. And the evidence of that is very significant demand, but also that in the 2024-2027 strategic framework, we have included financial inclusion and microfinance as one of our priorities. So we shifted from only focusing on social infrastructure and SMEs to actually recognizing that there is a big financing gap and a need. And for us, the trend is to look at vulnerability. Obviously, all these aspects about green, about climate that both of you have raised are there, but also we are applying, as we call it, the vulnerability lens to make sure that we focus on not only, but also on those who are the most vulnerable. Since Dawn is not able to join us, I would like to... sorry, Stefano, I'm sorry, Dawn, you're here, you're with us. I'm sorry.
Came out of nowhere.
Since Stefano is not able to join us, and Dawn, you're here, and you will get the floor. But before I give the floor to you, I would like to ask you to go back to the Slido. I launched a question for you. Can we get your opinion, please? So have a look at the question. You will find it at the name of this session. And it's basically says that from your experience, we are asking you what of the following trends are likely to have the most significant impact on inclusive finance in the next 5 years. And please, we will wait until, because some of you are connecting, but let's see what the room thinks. Let's wait for 2-3 more minutes. Okay, I think you can continue to vote, but if we can put it back on the screen, that would be nice. Okay, it has changed. So it's actually, so you see very equally the role of artificial intelligence and its applications in finance and the worsening of geopolitical situation as the driving forces, obviously equally with availability of investments and funding. So these are, I would maybe stop the Slido here and conclude that these are the key ones. Geopolitical situation seems to be on your minds, but as Sebastian says, these are interlinked with the point 3, as investors, including us as development finance institutions, are reacting to the geopolitical situation and then creating our investment strategies accordingly. Dawn, you are here, and I think since AI is recognized by our colleagues here as one of the main trends, and you come from fintech and digital world, I would maybe first of all like to hear from you, your perspective and take on the AI. I know we haven't planned it for the questions here, but when we prepared for the meeting originally, you had some very interesting insights that you shared with me and Grzegorz when we were preparing for the conference. And then when you maybe make a few remarks on that, it would be really good to hear about the main trends related to payments, fintech innovations, and potential financing sources.
Yep.
For the MFIs.
Yeah, sure. Thank you very much, and thank you indeed for having me here as well. I do a lot with fintech generally on a day-by-day basis, but also have a strong link to the microfinance world, also through a board position at ACF, for example. That's why I'm also here. And I really like to try and see how I can combine these two worlds, because I think it's really interesting what's happening in the fintech world, which is very largely driven by how banks are innovating to a large extent, or at least the banking world is being innovated on. And there's a strong relationship, I think, with how MFIs are experiencing the current changes. It's always hard because I apparently made some really smart remarks during our call, but I'm not sure if I can completely recall. So I'll just do my best to come up with something smart here. But I think if you would relate it to AI, I think one of the biggest challenges I think we're facing is that it's really hard for everybody to actually assess what we're talking about. The concept itself is such a broad term that's very often misused by marketeers that are just trying to make themselves look very fancy, while actually the level of AI that's properly being used, especially in financial services, most of it I could build in Excel as well. Right, so I think we're really talking about advanced analytics, mostly. If you talk about most of the ways we look at AI at the moment, we talk about just being able to draw statistical conclusions from massive amounts of data. That's not a self-thinking human-like robot, as very, very often people imagine AI to be, which is also something that, you know, on some hand, draws a lot of enthusiasm from some people, the technologists mostly, but also a lot of fears from consumers, policymakers, regulators, because that's the world that they fear that they can't control. And I think this is also one of the challenging things of this time, is that we have to cope with technology where we're increasingly having a hard time getting our heads around it and fully understanding the capabilities. Because I think, as Sujit was saying as well, we're heading into a period where indeed we're moving in towards much more advanced models where you could really see computers actually becoming as smart as humans. But at the same time, we also have to take a step back. If we look at our practical day of working and think, okay, how is this technology actually going to help me today? And it's not going to throw away all the jobs that are out there, or it's going to change over the world all of a sudden, right? We tend to overthink how fast things are developing. They tend to be slower. But at the same time, we know as well that the trend of transition has started. And if you want to be part of that transition, you have to start tagging along as well. But to give you a bit of an insight on that, I think one of the, and to also answer your question about the developments in fintech and how I think that they relate to microfinance, is especially focused on a couple of things. First of all, the customer experience, also linking into what Sujit was saying. Second of all, partnerships, also already mentioned. And third of all, security. So taking these different perspectives. So I think the first one, talking about customer experience, I think very often when we talk about technology advancement, we think about making things more efficient. We think about tools that make our lives easier. So that's for the people in the room that could be helping you out on your day-to-day job. But the question you should be asking is, how is this impacting what I do for my customer? So how are they experiencing value from any change that I make? And generally, the rule is, if you can't tell how it's actually benefiting your customer directly, in the sense of cheaper, faster, more convenient services, you should really consider whether you should be doing it. Because yes, making your life easier might save some cost, but it tends to also make you less able to actually follow what your customer wants. So generally, if you want to use technology, if you want to implement innovations, I would always recommend try to figure out how you change the life of your customers and get much closer to making an impact there, and then figure out how to use technology to get there, instead of starting with your own role and purpose, because what you're doing right now might not be necessary in the future, right? You're still doing something that might be obsolete in the demand of the customer in the future. So you have to start with their demand and the way that they are looking at your services and how they would like to consume them. And so there, if you then look at the competitive landscape, and you take at fintech companies, that I know that also quite some MFIs are struggling with new digital companies entering in the market, being very cheap, fully digital, just harnessing the low-hanging fruit, which is really fierce competition. But apparently, they also serve a certain purpose. Apparently, they can connect to a certain group of customers that are actually understanding, that are actually feeling comfortable with the way these services are being offered, that are even more comfortable because the prices can be lower, or the conditions can be better. And so you have to really figure out for yourself, okay, can we actually just see them as real competition? And can we look at the service level that they're offering in the sense of time, pricing, convenience, and can we get as close as possible? Because we might have to, right? I think that's the real challenge. I think if you look at how fintech is changing the microfinance world, it's really setting the bar on how financial services are being delivered. And if you then actually take a leap forward and look in some Western countries how technology is actually changing the way finance is being consumed, how payments have gone fully digital, how banking branches are closing by the day, and nobody's actually talking to physical financial service providers anymore. It's all digital, it's all interconnected, and there's hardly any administration. That is raising the bar for everybody, right? And you could argue, of course, that in developing countries, there might be a slower pace of change, but at the same time, we know how smartphones are being spread across the world. And they are actually the ones that are actually raising the bar on what kind of experience people are expecting. And they expect that from everybody in the end. Then if we go to partnerships, because also I think Sharjit made a good comment about all the technologies that are available to do this, but the good thing is you don't have to do it all by yourself. And because just like there are so many financial institutions, there are just as many providers that actually have reinvented or have already invented the wheels for you. So if you talk about, you could go from core banking platforms or middleware layers or even to banking as a service. And I think I especially want to talk a little bit about the last part, because increasingly what you see is that we started with technology providers that would help financial institutions with little parts of the value chain. They could help you with a credit analysis. They could help you with building a front end or just a chatbot or an app, or they could help you with this piece of risk management. But very slowly you see that actually complete solutions are coming together, which I think could be especially appealing for the smaller MFIs to actually get support, because they could actually not just build upon complete technology stacks that actually help you run the organization that you should, but actually also take a step back and, for example, support you with your licensing, compliance process, which is also becoming more important, as Sebastian was saying, right? Europe is exporting its legislative framework to the whole world, basically. And everybody should, at some point, try to figure out how to comply. And this is a massive job that is coming, I think, at all of you as well. So that's one of the partnerships, and I'll try to then wrap it up, not to make it too long. Because at the same time, while we see already these partnerships expanding in the financial industry, we have a really large challenge, as also been, for example, recently recognized by the European Commission in setting up new legislation called DORA, the Digital Operations Resilience Act, which is made to actually further dive deeper into the financial value chains. If you talk about how are all financial institutions operating on a day-to-day basis and how are we keeping them secure? Because the interconnection between all kinds of service providers is becoming massive and worldwide connected. And at the same time, we see that as well, that the environment in which they have to operate, you know, the internet has become an increasingly hostile place, which also for all the participants in the room is a real big threat. Right? This is something that you have to educate your employees on, to be fully digitally savvy, to at least be able to counter all the different attacks that are coming at them at a daily basis, from trials to fraud, phishing, all kinds of other means, or just hacks. And to actually build also on partnerships to actually make that work. So I think that these are at least the three big themes that I would like to give you, that I can draw between fintech and how microfinance is evolving. And I think a really interesting field of trying to figure out how to connect these two worlds to serve your customers in the end.
Thank you very much. We started this session a bit late, so I don't want to take too much of your cocktail time, but I still would like to ask if there are any questions from the audience. We have 5 more minutes. If not, I have a question. Okay, sorry. Yes, there is a
Just,
question from the audience in the chat, so I would like
very,
to
very
ask.
quickly, on AI, tomorrow, Sami Lahoud, one of the board members of MFC, will be hosting a no bullshit, cut through the crap, what are the use cases for AI? So I just want to encourage you guys, if you really want to know what are the use cases, please attend Sami's session tomorrow, because we're going to, as I said, cut through the BS, cut through the crap, and say, look, here's the real use cases. And one other comment, the United Nations, actually working with McKinsey, have just published a study that shows 600 use cases where AI will be supporting the SDGs. So I think you're very fair to say, we have to be very careful, but bring it down to use cases for AI.
Okay, excellent. This was a very clear pitch for the session tomorrow. One very interesting, we will prioritize the question from the audience. Please, if we can get the mic here.
In many regards, I think emerging markets are well in advance in terms of disruption and innovation and of banking services, and adoption, and also in some regards in terms of regulatory environment. So that's the point to Don. And in terms of the AI, I think blockchain, it will be very interesting to hear your views on blockchain and how the whole banking system, both regulator of monetary policy and also how money is being disrupted in terms of crypto and blockchain introduction. That's the question to, I guess, the gentleman in the middle.
Don, would you like to take that, or Surjit? I'll give you my mic.
No, so first of all, thank you very much for your comment. Indeed, I know very much that some emerging markets can be way ahead of Western countries in Europe, for example. I know that, for example, that when you talk about microfinance, we very often talk about disconnected parts of the region where you see different developments. It doesn't mean that their technology not advanced, but you just see different paces of space, different paces of innovation. And I tend to see the same thing also between different continents, for example, right? So if you go to America, there the capital markets are really well evolved, but payments are crap. And if you go to Europe, generally the capital markets are not so well evolved, but payments are really, really efficient. So I think you'll see these differences, I think, everywhere. And I think especially it's mostly about cross-pollination. How do you actually learn from each other about these developments? Yeah. Thank you very much. Would you like to pick the,
Yeah. On blockchain, so what is blockchain? It's a distributed ledger that allows you to record transactions in an efficient way so they can't be changed. For my bank, I'm not pushing blockchain just yet. For the Beneficial State Bank, I'm just saying, just wait, see. I do think there are some good use cases. I was bring it down to use cases here. But for now, I'm only unless you're bleeding edge fintech, leverage it. But I'm putting a lot of investment and time in that. I do think the sort of use cases are, smart contracts for loans. You can leverage that as a mechanism. You can leverage it for cross-border transactions. You can use it for KYC, know your client here, because it provides that. But given my experience here, I'm not pushing it. Other people will have a different point of view. Yeah.
Just like to make one remark about it, because I think one of the biggest game changers we have potentially ahead is the use of central bank digital currencies. So I think also you see that in Europe there's a lot of debate about the digital euro. We see that, of course, that China is developing that. We've got a couple of private initiatives of stable coins that are being developed. And that actually is a new way of issuing money, which are more directly related to the central bank rather than to commercial banks issuing commercial paper. And I think that could really be a big game changer in the end. It's still very doubtful what it will look like because, for example, also on European level, there's a lot of debate still on whether there should be a digital euro and what it will look like and what kind of features it should have. It's still heavily debated, but it looks like there will be one. And once that happens, I think we'll see a big change in the financial system.
Thank you. Thank you for the question, and thank you for those answers. I think we'll have the last question from the screen for Sebastian, and then we'll wrap up.
So if I read the question, what is your prediction of equity market in emerging and frontier market? So if we take...
Sebastian says, as an expert of microfinance investment, what is your prediction?
I think first, never listen to experts. Particularly, I was always wrong in many things, you know. But if we talk about the microfinance equity market, the trend are that in Europe, developed world, there's still a lot of mainstream banks that are traded at below net asset value, and really far below. Société Générale is still at 0.3 its net asset value, where it was close to 2 20 years ago. So meaning that the general trend is that we still believe the financial sector needs so much equity with so much regulation that the leverage to invest as equity investor is quite poor, generally. Having said that, as usual, when there's some market where the growth could be big, etc., it could be of interest. So I think it will, as every equity market, it's buyer and seller. You know, how many opportunity do you have locally to invest in the financial sector, and what are the growth plan of this organization, and how many are eager to buy it. But we see in many markets that several networks are facing difficulty to sell the microfinance institution. I've been involved in a couple of transactions in Central Asia, not so easy. In Africa it's even worse. Several leading microfinance networks are starving to be priced above one-time book value. In some markets where the geographical and demographical growth is very high, so technically, they could grow a lot, but still it's one-time book value. I'm talking about Madagascar, country relatively stable for Africa perspective, Cameroon and the like. On the track record of equity fund in emerging market in financial institution is not that good. And one key explanation is that we have not benefiting from the boom of the market that developed a lot, like China, for instance. There was very, very few microfinance institutions in China, very few equity investors. So unfortunately for us, that's a typical market that developed with a huge financial institution development, but without any track record for our fund. And we were in Myanmar and other countries where it was more difficult. But there's some equity market that perform super well in emerging markets. In infrastructure, renewable energy infrastructure, you could have very decent return in emerging markets. So that could also help investors to understand that in frontier and emerging markets, even in the financial sector, there could be good opportunity of growth. But as of today, as far as I could see, on the last point is that a lot of developed leading banks are not so more interested to develop in many countries. A lot of them exiting their strategy plan in Caucasus, in Central Asia, etc. But also in Africa, you see less and less international banks eager to invest. And even Morocco, for instance, relatively stable country, close to Europe. Société Générale is leaving Morocco. So that signal that emerging market is not so much on the trend. But you could see the opposite with JP Morgan recently announcing that they are opening many hubs in emerging markets. So, but globally, I would say for financial institution, I would not expect the price to book value to increase much more than one time average where it is today globally.
Thank you very much, Sebastian. I will not try to summarize this session, but only maybe 1 minute highlights from what we heard. We heard that our sector is becoming more and more relevant, and more countries are recognizing it, adopting financial inclusion strategies. Green finance is very important. You said yourself in the audience that you see political instability or political stability as the prerequisite for good functioning of the sector, but we see many instabilities which put at risk even for equity investors. Obviously, this instability is something they're looking at, especially when they want to invest long term. I heard from some of the investors that when the war, actually the invasion of Ukraine started, that basically they reassessed all the neighboring countries and definitely assessed it differently risk-wise. So for equity, this is important, obviously for loans as well. What we heard also is that it's very important for institutions to analyze how technology can help them. It's been a topic for many years. Now we hear many buzzwords, but what you all said is that the customer experience matters. You should see what works for you. You should see what makes sense for you to do, what will help you on one hand cut operational costs, decrease costs, improve efficiency, but also keep in mind the security. Finally, the development finance institutions like the CB, but also others, are becoming more active in the sector, not just here in the region, but worldwide, indicated that there is a demand and there is a need to basically assess more fundamental needs in the sector. We also heard from other colleagues today that there are new groups, new vulnerable groups, such as migrants and refugees and others, which will require financial services. I would just highlight the final sentence from this conference, which some of you repeated, but also the audience, that the digitalization is inevitable. It's a trend and transition has started. It's well underway, so you better get ready. I would like to thank all of you for your patience and contributions. I would like to thank the MFC, our speakers, and we can continue to discuss during the cocktail. Thank you.